Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So let's do a quick market update of what's going on in the markets here. We had non-farm payrolls number that came out on Thursday and came out better than expected with lower inflation. And that kind of caused equities to basically jolt up on the number at 8:30 a.m. in the futures market. And you had a little bit of, of course, the algos and whatnot, selling it and profit taking and whatnot. So a little bit of choppiness here, but more on the upside than anything. So typical action here. And then at the 9:30 market open, you just had a straight line up, right? Again, telling you sentiment wise that this was considered a very bullish move, right? A very bullish thing. And telling you that yes, the stronger data, weaker inflation tells you that U.S. economy is doing fine, and since inflation is coming down lower, and it's not getting hotter, then chances of rates staying where they are, or even a chance of a rate hike, just diminishes further and further, right? These are all probability things, but however, that if the number came in better than expected, that basically tells you that the chance of a rate cut in July, it just basically diminishes, and that's what happened, right? The ADP number gave it some hope, but the non-farm payrolls just wiped that out, right? Unless we get something else or some other data that changes things, but I don't think so. We saw basically stocks move up on that, and the probability of a rate cut in July just basically gone. However, we might see one 70% chance in September. And then another one after that, it's like kind of possible, but we'll see, right, with the data. So stocks went up on this, right? S&P went up on this, NASDAQ went up on this, Russell 2000 went up as well, but then came down and was choppy, right? Dow Jones went up on this. So equities were basically really positive after the report. We also had the big bill, right? The big beautiful bill that came out that wasn't have been basically approved, and that is also adding more fuel to all of this, because you've got a lot of spending that they're going to do right over the decade, so trillions of dollars. And if you look at the M2 made a new high and continues to move up, which tells you liquidity is there, right? Liquidity is there. They're going to pump this bill also and push and pump more money there, add more to the deficit. Okay, this deficit that they've been talking about is never going away. There will always be pumping and money pumping and printing going on, which is all good for the stock market as a whole. So we saw this move up higher, and then in the futures market later we saw some selling here. I don't know what to really make of this. Could you say that this was buy the rumor, sell the news kind of thing? We'll see. I don't make much of it right now, right? We'll want to see what the COT report comes out and what positioning is. But what we're seeing, however, to keep things in perspective, is that as the equity markets grind up higher, as stocks grind up higher, right, there are still a lot of people on the sidelines, not investing, not, getting to this market, except until now. Now, I don't want to confirm that yet because, again, I want to see the positioning when we get that report. But, this whole V-shaped reversal that we had, where in the first beginning of the year, nothing but selling because of the tariff fears. And then all that turn around, and then the taco Trump basically coming in and Trump reversing things, and now we're seeing the equity markets make all-time highs. And for people who are sitting on the sidelines and just have cash, you're looking at this and you're like, oh shit, I gotta make my money work. I can't be sitting on bonds and losing money, right? So all this currently and continues to be positive for the equity markets. It continues to push this higher. It continues to create that floor, especially with the liquidity and the big beautiful bill and the M2 and also just the price action. And now you're getting positioning starting to slightly show, and people, market participants and other traders, investors starting to say, okay, let's put some money to work, which could mean that the equity markets can continue to run up. And no, we're not in a bear market, we're in a bull market, and we could possibly see this inch up and grind up higher. Could we see some shakeouts from latecomers coming in and then being shaken out and then we go up? Sure, 100%. We could see that. We could see some sort of sell-off, shakeout, but I think it will be short-lived, and then we could see this continue the trend higher, right? We're seeing also the moving averages start to show bullish sign as well, right? The 20-day moving average, we're seeing a nice bounce there above all the other moving averages as well. The 50-day moving average as well, starting to also above the slower moving averages, right? We have the 100, 150, 200 also yet to change, but you're gonna see that happen as the price continues to grind up higher. Along with all of this, right, we're seeing other individual stocks like Apple, for example, grind up and play catch up as well. Nvidia, all these stocks, right, Nvidia make all-time highs. All these stocks basically helping the equity indices move up higher. Now, Apple's a big one because if Apple gets its steam to push up higher, we could see those indices also melt up higher as well. And if you look at the other FANG stocks as well, underperforming a little bit here, but also yet to see move up in Google. Amazon as well, right? Not far from all-time highs, although the equity indices are at all-time highs, right? So the FANG names, right? The FANG names have yet to melt up higher, right? Now, Netflix here, a little bit pullback, but we could see it move up as well. Microsoft, right, continues to do well, making all-time highs, right? So, the other names like Google, Apple, Amazon, once you start getting money being poured there, the people who are on the sidelines deciding, okay, what should we do? Let's pour money into these stocks that are lagging behind and push the equity markets higher. So it continues to be bullish for the markets, regardless of whether you're going to get the rate cut now or rate cut later, but it continues to be good for equities. So if you like stuffs like this, feel free to subscribe, feel free to give your inputs, your questions, your comments on this channel. We go over other markets as well, fixed income bonds, currencies, metals, energies, crypto. I do that more on the private channel. If you're interested in joining that, there's a link below in the description to join the private Discord chat room, and we will discuss more about those in that group. So yeah, if you like this, hit the like button and subscribe if you haven't already, and let me know what you guys think as well, and I'll see you guys around. Cheers. Bye.